Hello friends, welcome to Accurately Accounts. I am Soumya here. Today I am going to explain how to prepare the financial statements in case of non-profit organization. Just like any other trading organization, any other business organization, it is very important even for the non-profit organization to prepare the financial statements. We all know why financial statements are prepared. Generally, the main objective behind preparation of financial statements are to know about the profit or loss earned by the organization as well as about the financial position. So financial position refers to the actual value of assets, value of liabilities and capital. So in case of non-profit organization, we are going to prepare two different accounts and one statement at the end of the financial year. So the first and foremost account which we are going to prepare is the receipts and payments account. The second account prepared is income and expenditure account. The last one, it is not an account but it is a statement, balance sheet. So now let us understand what is the meaning of the receipts and payment account. The name only says receipts means whatever we receive, payments mean the expenses what generally is met by the non-profit organization. So receipts and payments account basically is a typical real account. Already in the first PUC you people have learnt about the cash book or cash account. So in the cash book or cash account, so we had two different sides, the debit side and credit side. Generally it was our practice to record all the receipts, whatever the money received on the receipt side and money or cash paid, the expenses met out of cash was to be recorded on the credit side. So here also we follow the same thing. Otherwise you can also apply the rule of real account. The real account rule says debit what comes in, credit what goes out. Whatever the cash receipts or the cash what you receive, that you can put it on the debit side, and the payments generally made for different expenses that can be recorded on the credit side. Now let us see what is the exact meaning of the receipts and payments account. So these are the accounts considers the cash receipts and cash payments of non-profit organization. So we can call it as a summary of the cash receipts and cash payment of the non-profit organization. This account is completely prepared on the cash basis. Here only the cash receipts and cash payments of capital as well as revenue nature taken into consideration. So you have learned the meaning of capital items and revenue items in my previous video. Capital items are non-recurring in nature, wherein the revenue items are recurring in nature. So all the capital receipts and revenue receipts, capital expenses and revenue expenses are considered below the receipts and payments account. So here, why exactly this receipts and payments accounts are prepared, let us understand. So generally the receipts and payments accounts are prepared in order to find out the closing cash balances. So with the intention of finding out the closing cash balances, generally the receipts and payments accounts are prepared. Now let us see and understand the format of receipts and payment account.
In the receipts and payments account, generally we begin with the opening balance of cash. Cash in hand, cash at bank will be taken on the receipt side, that is debit side of the receipts and payment account. After that, generally we take the revenue receipts. So with pertaining to the non-profit organization, the revenue receipts are subscriptions, general donations, sale of newspaper, sale of periodicals, sale of old sports materials, locker rent, sale of scraps, proceeds of show, miscellaneous receipts, entrance fees, grant in aid, etc. Then we take all the capital receipts. So generally the capital receipts in case of non-profit organizations are legacies, life membership fees, specific donation, sale of investment, sale of fixed assets, endowment fund, etc. So to the payment side, we begin with the overdraft balance if it is given in the problem. Otherwise, we treat all the revenue payments first. So the revenue payments are wages or salaries, rent, rate, taxes, insurance, printing and stationery, postage, advertisement, sundry expenses, telephone charges, audit fees, honorarium, conveyances, newspapers, repairs, etc. And we also take the capital payments like purchase of fixed assets, purchase of investments, fixed deposits, etc. Then we arrive at the closing balance. Generally, the closing balance will be on the payment side. So it can be in the balance of cash, or it can also be in the cash at bank balance.
I can say that you people can expect a 2-mark question on the meaning of receipts and payment account. The one thing is very much clear here, that in the receipts and payment account, we consider only the cash transaction. The non-cash items like depreciation, prepaid expenses, outstanding expenses, incomes received in advance, bad debts are not taken into consideration in the receipts and payment account. So after the receipts and payment account, the next account generally we prepare during the financial year ending for the non-profit organization in order to find out the financial position is income and expenditure account. So generally all these accounts, the receipts and payment account and the income and expenditure account, considers the transaction for a particular period of time, that is what, 12 months, 1 year, what we call it as a financial year. So now let us understand the meaning of income and expenditure account. So income and expenditure account, as the name says, here we consider all the incomes and expenditures of non-profit organization. What type of incomes and expenditures are considered here? So all the revenue natured incomes and revenue natured expenditures are considered below this particular account. So basically income and expenditure account is a typical nominal account. So you all know the rule of nominal account. The nominal account rule says debit all expenses and losses, credit all incomes and gains. So here also to the debit side we consider all the expenses of the non-profit organization, particularly the revenue natured expenses, and to the credit side we treat all the revenue natured income. The revenue natured expenses and incomes are recurring in nature. So this is the meaning of income and expenditure account, and the objective behind preparation of income and expenditure is to find out the surplus or deficit of non-profit organization. So for profit organization, for other forms of business organization, generally the result of the profit and loss account is going to be the profits or losses, but here it is not into business, so we prepare only the income and expenditure account. We consider only the incomes and expenditures of the non-profit organization, so we get the balances as surplus or deficit. So let me tell you the meaning of surplus. The excess of income over expenditure we call as surplus, wherein the deficit is excess of expenditure over income. Now let us see the format of income and expenditure account.
Here is the format of income and expenditure account. Generally, we record all the revenue expenditure on the debit side, like consumable materials, honorarium, salary and wages, repairs, expenses on any cultural events or specific shows, entertainment expenses, printing and stationery, newspapers and periodicals, postage, upkeep of lawn, rent, municipal taxes, insurance, loss on sale of fixed assets, depreciation on fixed assets, audit fees, miscellaneous expenses. And to the credit side, it is actually meant for recording the revenue incomes. So here we consider the subscriptions, grant received, entrance fees, general donation, interest on deposits, dividends, any collection for specific show, profit on sale of fixed assets, locker rent, clock room rent received, hall rent received, receipts from sale of newspaper and magazines, miscellaneous incomes, and then we go for balancing the income and expenditure account to find out the surplus or deficit. So if we get any difference on the debit side, we call it a surplus. Surplus is nothing but excess of income over expenditure. If the difference is on the credit side, it is going to be deficit. So wherein we can consider it as excess of expenditure over income.
So it is a common observation from the income and expenditure format that we treat all the non-cash items here. So here the income and expenditure account is prepared basically on the accrual basis. So the receipt and payment account was prepared on the cash basis, wherein the income and expenditure account is completely prepared on the accrual basis. So we treat all the non-cash items also into consideration in this particular account. So after this, after finding the surplus or deficit, we're going to prepare the balance sheet. So balance sheet, it is a statement generally prepared in order to know the value of total assets, total liabilities, and here in case of non-profit organization, it is going to be the value of capital fund. It is not capital, it is capital fund. And about the capital fund, already I have explained you in the previous video. So you people can refer my previous video for calculation of capital fund. So these are the financial statements which generally are prepared in the non-profit organization at the end of the financial year. I repeat again. First one, receipts and payment account, in order to record the cash receipts and cash payments. The second account is income and expenditure account, in order to consider the revenue natured incomes and expenses of the non-profit organization, and balance sheet is prepared in order to find out the assets, liabilities and capital fund of non-profit organization. As I told you before, from this chapter we can expect a 12-mark question. If you observe the board question paper pattern, in the section D, the very first problem will be on the non-profit organization. So most of the students find it very difficult to solve the problems on non-profit organization. As I mentioned earlier also, this is the chapter which is really a challenge to the teachers also to explain. So now I am going to explain certain important adjustments which will confuse the teachers as well as students while solving the problem. The first and very important adjustment which will ever confuse students is about the outstanding expenses. So let us understand the meaning of outstanding expenses. So these are the expenses unpaid. So these expenses may belong to the current year, previous year, and also can be of the next year. So we can find adjustment for the outstanding expenses for 3 different years: current year, previous year and the next year or the subsequent year. So current year's outstanding expenses generally we need to add. The last year, the previous year outstanding expenses we need to minus. And if there is any expenses outstanding for the next year, subsequent year, then it is treated as prepaid expenses and again it is supposed to be deducted. After the outstanding expenses, the second important adjustment is outstanding incomes. So even for outstanding incomes, we can find 3 different years, or generally the adjustment related to outstanding incomes will be given for 3 different years. So current year, previous year and next year. So the current year's outstanding incomes, income earned but not received, accrued incomes what we generally call it as, we need to add. And previous years we need to minus, and subsequent year it is going to be the income received in advance. Income received in advance and we need to minus this. The third adjustment is the most common adjustment which we can observe in almost all the problems of non-profit organization, and the adjustment is related to the subscriptions. Subscriptions are one of the sources of income to the non-profit organization. So here, if there is any outstanding subscription for the current year, then we need to add. I repeat again, the outstanding subscription for the current year need to be added. Outstanding subscription for the previous year, then it is supposed to be deducted, minus. And then the next year outstanding subscription, or you can also call it as received in advance subscription, received in advance, it has to be deducted or minus. After considering these 3 important adjustments, I just wanted to explain you the treatment of certain adjustments. So the first one is tournament fund. And tournament expenses. So, how to treat this tournament fund and tournament expenses? Generally, the tournament fund will be treated below the liability side of the balance sheet. Say suppose in the question they have given the tournament fund as well as the tournament expenses, then the tournament expenses need to be treated as capital expenditure. And we need to deduct the value of tournament expenses from the tournament fund. It has to be deducted from the tournament fund. I'll write here as tournament fund minus the tournament expenses. So this is supposed to be the treatment of tournament fund. So need not be only for the tournament fund. For any funds generally, the treatment will be on the liability side of the balance sheet, and if any expenses associated to that, definitely it will be treated as a capital expenditure. Now say the tournament fund is not given. Only the tournament expenses are given in the problem. Then the tournament expenses will be treated as revenue expenses, and we need to treat it in the income and expenditure account. Similar to the tournament fund, say suppose if the prize fund is given in the problem, then we need to treat it below the liability side of balance sheet. If there is any prize expenses, so prize expenses means the amount spent on purchasing the prizes, then it has to be treated as the capital expenditure and should be deducted from the prize fund in the liability side of the balance sheet. Say suppose if the prize fund is not given, then the price expenses are mentioned in the problem, then you can treat it as a revenue expenditure and you can show in the income and expenditure account. The last adjustment related to the non-profit organization problems are deferred revenue expenditure. So let me explain you the meaning of deferred revenue expenditure in simple terms. These are the heavy expenditures incurred whose benefit will not exhaust in 1 year, which will spread over to the subsequent year, maybe 2 years or 3 years. So such expenditures we don't treat in the current year's income and expenditure account as well as in the balance sheet, because it doesn't belong to current year's transaction. Thank you so much for watching my video. For more such videos in accountancy, do subscribe my channel Accurately Accounts. If you have any queries, if you have any suggestions, if you have any doubts related to the topic, you can drop in mail at accuratesoumya@gmail.com. Please like, share and subscribe my channel. Thank you.